recent situation pointing to political instability in Chad and Mali drags the desired momentum towards an integrated continent. The African Continental Free Trade Area, AfCFTA agreement, could create the largest free trade area in the world, connecting 1.3 billion people across 55 countries with a combined GDP valued at $3.4 trillion. It has the potential to lift 30 million people out of extreme poverty, but achieving its full potential will depend on putting in place significant policy reforms and trade facilitation measures. Another important requirement for the execution of the continental integration are common standards of law, order, and governance, requiring political stability and leaders that can be accepted as models for the continent. Hello, welcome to Global Business Insights, where we look at the headlines moving markets. In this episode, we look at global geopolitics as it stokes new uncertainty, as well as some developments in the African continent. First, let's go to Africa, some unsettling matters. Mali recently arrested some high-ranking officers over an alleged plot to overthrow President Assimi Goïta's government. The arrests come as the military-led government in power since the 2020 coup and subsequent uprisings delays elections and tightens its grip on power. In May, authorities dissolved all political parties and banned political gatherings, sparking criticism from opposition groups and civil society. General Abbas Dembele, the former governor of the Central Mopti region, is among those in custody. And in Uganda, a judge has refused to grant bail on Friday to veteran opposition figure Kizza Besigye, who has been in jail for nearly 9 months on treason charges. While in Chad, the former prime minister and main opposition leader Success Masra has been sentenced to 20 years in prison after a special criminal chamber in N'Djamena found him guilty of inciting deadly communal violence in May. The conviction of Masra, who ran against President Mahamat Idris Deby in the May 2024 presidential election, losing to the incumbent, is expected to heighten concerns among international observers over political freedoms and judicial independence in Chad. According to David Pilling, writing in the Financial Times, Africa is seeing a broader warning to ruling elites from Mozambique to Nigeria and from Uganda to Togo, all of which have seen recent protests against politics as usual. And Africa's youth, the so-called demographic dividend, are not happy. Instead of reaping gains from the dividend, the youth are seeing their aspirations stifled by aging politicians. In Kenya, reporters continue to observe a palpable anger. In Nigeria, no one can deny progress is made in stabilizing the economy, but urgently needed momentum is held back by still high interest rates and inflation and the revival of the brand of politics, unlikely to deliver the kind of shared vision and principled governance that can realize a huge upside potential. Nigeria reserves have dramatically improved. That's foreign exchange reserves, thanks to improving confidence and more robust capital inflows, but foreign direct investment inflows are still barely trickling in as some of the more long-term investors remain on the sidelines. My sense is that gaps on the social front and the gaping inequality masked behind positive macroeconomic data is not getting the attention it deserves. Others have pointed out that a demographic dividend in a high technology age will not happen if youths are not quickly equipped for a different technology-driven environment. Indeed, the context that gave the likes of India and China an advantage 2 decades ago has changed dramatically. The world is now going to need much less resources and will be far more efficient, but productive and more manless than ever. The key development levers increasingly are cleaner energy for data centers, infrastructure backbone for artificial intelligence technology development, and advanced chip production. Already, America is betting heavily with huge artificial intelligence and new technology investment, perhaps pushed by fear of a much more competitive China. We are seeing an accelerated artificial intelligence-driven trajectory well beyond what we started to see post-COVID, when the new technology revolution kicked off as industry searched for a new major growth catalyst. So what about Africa? Similar to other regions, it is also in need of catalysts for much faster economic growth, as the imperative to bridge the now critical infrastructure gaps become far more compelling than ever. Smart innovation is also on the rise in the continent, but many, while applauding all the possibilities, still urge for the urgent acceleration needed for Africa to emerge as a serious player in a new and very different global economic space. A demographic dividend can be elusive without massive investments in education, rescaling, motivation, and all the retooling required if we are to see this fast-growing young population contributing to a continental economic behemoth in an integrated Africa. On the other hand, idle, frustrated youths could be easily weaponized to harvest social chaos driven by demand for a different dynamic of progress and cry for better governance and more just societies. Now to more business stories. The Dow Jones Industrial Average closed slightly higher on Friday as Trump's long-awaited tariffs come into effect and markets brace for the fallout. Markets were led by the tech sector, with the Nasdaq Composite up 0.98% for a record close. The tech-heavy index also hit a fresh all-time intraday high earlier in the day. The winner in the tech space has to be Apple, as it lifted both the S&P 500's tech sector and the Nasdaq as it surged 13% this week after announcing plans to spend about $600 billion in the US over 4 years. Bezalel Smotrich, Israel's finance minister, has criticized Prime Minister Mr. Netanyahu's plan to occupy Gaza City, saying this is not how you win a war, adding that he had lost faith in Netanyahu's ability to achieve a decisive victory. Israel's European allies have also sharply criticized Mr. Netanyahu's plans. Indeed, the week ahead looks set to be dominated more by complex geopolitics on the Israel-Gaza front and also on the Russia and Ukraine front. Kaja Kallas, the European Union's top diplomat, has convened a meeting today of European foreign ministers to discuss the war in Ukraine, adding that any deal between America and Russia must include the EU and Ukraine. Europe's leaders will be aiming to talk to Trump to influence the agenda ahead of the meeting he hopes to have with Putin this week. JP Morgan now sees the US Federal Reserve cutting interest rates by 25 basis points at its September meeting, citing signs of weakness in the labor market and the dovish impact of Trump's latest Fed governor nomination. On the macroeconomics, US July Consumer Price Index is out on the 12th, followed by wholesale inflation PPI on the 14th. Both could impact market sentiment. Core CPI, that is ex-food and energy, is expected to be up 0.3% month on month. The readings will influence what many now hope, that's over 90% probability, could be a more dovish FOMC rate decision. That's a 25 basis point cut, given the weakness in the labor market. If data continues to show higher than expected inflation, that would obviously undermine the growing expectation for impending interest rate cuts. The data showed on Sunday that Egypt's annual urban consumer price inflation dropped to 13.9% in July from 14.9% in June. Urban food and beverage prices were down 3% overall compared with June 2025, but rose by 3.4% if you are comparing to July 2024. Nigeria will report its July CPI data. That will be out on Friday. And in what many see as a move in the right direction, the Nigerian National Petroleum Company Limited has officially stopped funding the Road Infrastructure Tax Credit Scheme, a flagship policy introduced during the administration of the late former President Muhammadu Buhari after committing $577.6 million and 822 billion naira to the program over 16 months. That's according to a report from the Federation Account Allocation Committee. The exit of the NNPC Limited from the scheme implies the national oil company can focus on its core business functions, including fixing its still ailing refineries, which it confirmed it is not going to sell. It also means the federal government will require 3 trillion naira to complete road projects awarded under the scheme. The new team at NNPCL can still be said to be settling in and is doing well in focusing on purely commercial roles and gaining the confidence of investors who are still uncertain on how government will be interfering in its operations. Noting this is a much more competitive global oil and gas space than what we had a decade ago, with most players now cutting fat and aggressively reviewing operational efficiencies to maximize returns to their shareholders at a time when margins are tightening in a market where crude oil prices are expected to be at best tepid. And in another win for Nigeria, the Nigerian Export Promotion Council (NEPC) disclosed that non-oil exports were up 19.59% to $3.225 billion in the first half of 2025, compared to $2.696 billion in the same period of 2024. China's consumer price index CPI was unchanged in July from a year ago after rising 0.1% in June. The consensus was for a minus 0.1% annual change. Month on month, July Chinese CPI, however, came in at 0.4% versus June's 0.1% decrease. China's producer price index PPI, or wholesale inflation, fell 3.6% year-on-year in July, lower than minus 3.3% expected by markets. Nvidia and AMD are reported to have agreed to give the US government 15% of the revenues from chip sales in China in an unusual semiconductors export license deal with the Trump administration. Also, chip giant Nvidia pushed back yesterday in response to allegations from Chinese state media that its H20 artificial intelligence chips are a national security risk and not technologically advanced enough or environmentally friendly. In response, an Nvidia spokesperson said it took cybersecurity very seriously and Nvidia chips do not have backdoors permitting a remote way to access or control them. Asia-Pacific markets closed mixed and were positive, still somewhat subdued most of the day as investors awaited official announcements on if the August 12th deadline for a US-China tariff truce would again be extended. European leaders are reported to be pressing Washington to ratchet up sanctions pressure on Moscow as they seek to shape the outcome of a meeting between Donald Trump and Putin that could determine the fate of Ukraine and long-term security of the continent. European shares opened higher, with London's FTSE 100 so far leading gains among major regional bourses. US futures also looking positive ahead of opening. Wall Street strategists are concluding that Trump tariffs are not enough to derail the market rally as indexes hover near record highs. Other factors overriding tariff anxiety include the optimism over the artificial intelligence trade and renewed expectations that the Federal Reserve will cut rates in September. Well, that's all we have time for on this edition of Global Business Insights. Thanks for watching. This is Bode of Shosami. Bye-bye.